Okay, good afternoon, everybody. Since we're going to treat mostly the ratio questions, I first just want to give you a few reminders. There at the right top, remember we only need to round off to one decimal, and it's one of the instructions. So don't quote three decimals, then two, then rounding off. So one, that is what the memo, the marking guideline wants. All right, then on the I've color coded this and I've sent this also to Mr. Fouchier. So you haven't said ratio is rarely asked, but it can. So remember that's your total assets and total liabilities. But don't confuse this with the balance sheet. It's without your shareholders' equity. It's the total assets and the total liabilities. And remember, if it's 1 to 1, it's solvent. You can't be very solvent or very insolvent. You're either solvent or insolvent. Yes, you can be in a better financial position, but just remember that. Then our formula sheet, I took one from one of the national papers. Now they put the debt equity sometimes there, sometimes it's lower down. But look at the green ones. All these green ones, and remember this is a duplicate also on your answer formula sheet in the exam. They give you the asset test ratio, the shorter version and the longer one. It's the same thing. That's why there's a or. So we've got 6 liquidity ratios. It's the current ratios, current assets and to current liabilities. Then the asset is the same thing, but with disregarding the inventories on hand. So those are the common ones that they normally ask in paper 1 to one of these must be calculated or just quoted. Then we've got the 2 stock ratios, mostly asked in paper 2, but it can be in paper 1. Now remember, stock on hand is the one with the days. So then we're focusing on how long the trading stock will last. So the focus should be on stock over cost of sales. Then the stock turnover is your how many times per year are we rolling over the stock? So it's the focus will be on the sales. So cost of sales over trading stock, but it's not the 365. Then your debtors and creditors collection and payment period. We strive to get the debtors normally within 30 days with a discount or not. So we just want the creditors to be a more extended payment period so that we first can collect money from debtors before we have to pay the creditors. But we'll come to questions like these. But when they refer to liquidity, it can only be the green ones. It can be nothing else. Then on the risk and gearing, it's the blue ones. Risk will always refer to your debt equity ratio, meaning what was the ratio between the borrowed capital, which is loans, and the owned capital, which is shareholders' equity coming from share capital and retained income. So that is called owned capital and borrowed capital. Now, we don't want this to be, when it nears a 0.8 to 1, then the risk is getting too high. And that risk is actually the focus is from the bank side so that they won't allow additional loans. So if the ratio is already very high, you cannot even try to motivate why we can rather go for loans than issuing shares if we need to finance something. So the financing activity risk, and the other one is this blue one, is the ROCH, the return on capital employed. Now, I've seen in a paper that was written in September, I think it was Mpumalanga, if I remember correctly, they gave the total capital employed. Now, remember the difference between the Roche and the Roche is that we're including now the loans. So just make sure if they give you this ratio in a balance sheet, there's no heading for capital employed on the balance sheet. It's your note 7 and 8, your shareholders' equity plus the loan amount. That employed includes your loans. But never mind, the Raj is now your gearing. Are we utilizing the loans that we've borrowed positively or negatively? I know that some of the textbooks, they go for higher gearing and lower gearing, but you'll see on the marking guidelines, they prefer positive or negative gearing. Positive gearing is you have to compare this answer with your current interest rate on loans, which is normally supplied on the paper, but otherwise we work between 11 and 14%, but they will specify if you're going to need it, I'm sure. If the interest on loan percentage is higher than the ROCH, then we've got negative gearing, meaning we're not utilizing the loans optimal. So risk and gearing, and I've worked through all the provincial papers to make a little summary of repetitive questions so that we can make sure what to focus on. And I promise you, in every single paper, risk and gearing was definitely asked with a comment or even a calculation. So make sure about risk and getting the calculations and how to comment. In these comments, you have to refer to the risk, being the risk high or low. Will we get more loans or not? And keep it vague. Use language like they should be able or they should not struggle. But we can't say definitely. So keep it vague. Then on the gearing, you have to compare to the interest rate on loans and then comment whether positive or negative gearing. All right, so we've got the easies, then we've got liquidity, and we've got risk and gearing. Then I also saw 3 papers in the September provincial papers where they use the NAV as a ratio on the balance sheet that you have to work your way up back to your shareholders' equity. So just maybe make a note of that one for the balance sheet. Now the NAV is your shareholders' equity, and then your number of shares is in a point of time. So that is at the end of the year. So on your share capital notice was your final number of shares in issue. And that must always be compared to the market, the JSE price or the NP, how they sometimes refer to it, even to an issue or a repurchase price. Then you can say whether the shareholder should be satisfied if you compare it to the NAV. Then on the dividends, I've marked the dividends there in yellow. This was always the original formula for the DPS, the total dividends for the year. So that's your heading in note number 8 for paid and final, and then divide by the number of shares. But that can only be used, this one on the left, right-hand top, if there was no change in the number of shares issued. So if the number of shares stayed a constant through the year, then we use this one. Now, I haven't seen a paper like having no movement on dividends in the last 2 years. So this one most probably we're not going to use. They rather ask you to calculate the total dividends per share, so we're not using that one. Then you have to calculate, normally they will either give you the interim or the final one, and you have to calculate the other one. The difference between this answer, if you calculate them separately, it's because of the movement on shares. In that point of time, when we pay the interim, there can be a different number of shares in issue than at the final dividends at the end of the year. So say, for instance, there you can maybe divide by 2 million, but on this side, it's going to be 1.8 because we repurchase some of the shares. Make sure about this calculation. This is also one of the repetitive questions that I picked up in the trial papers of the different provinces. So that will be your dividend calculations. Then the combined dividend calculations, we'll refer to EPS now, is the payout policy. Another word that they sometimes use is the payout rate, the dividend payout rate. Now that is when we take the dividends per share, the DPS, and that will be the DPS for the year. So if you had to calculate, it's a combination of these two, divide by the EPS, which is the earnings per share, expressed as a percentage. You know this one. It was only put on the formula sheet the past few years. We tried to figure out with this one, of every R1 that we earn in profits, what percentage of that earnings was paid out and what percentage was retained for future expansions or investments or whatever. This one is similar calculation to the payout policy on this side, but there they use the total dividends for the year, the rand value divided by the net profit after income tax, your final amount on the income statement. But it will present you then now with the same percentage rounded off. Either or, depending on the shortcut on the information, I will then decide which one I would have used. Okay, now back to EPS. There's also a question that refers to earnings. Would the shareholders be satisfied with their earnings? Then we're going to look at the Roche. This is the normal one that we started treating in grade 10 already. It's your final net profit divided by the average shareholders' equity. So it's the average half times last year's share capital and retained plus this year's to get the average in a percentage. And then this one, just make a note maybe for yourself. Remember to compare this to the interest rate on investments, because that is how the shareholder will, that is the tool to measure was it worth his while, was the return on his investment better, including risk, than he would have obtained in the bank. EPS, it's also referring to his earnings and the return on his investment. It's your net profit after tax divided by the number of shares in issue, so that we can see for every one share that you own, how many profit did you earn with those shares. Now, for this one, is there at the bottom, remember this weighted average number of shares. Now, we have to apply it on EPS, because EPS, we can't just do it at the end of the year, that number of shares, because then it's in a certain point of time, and the directors can manipulate this one by maybe repurchase on the very last day some of the shares. The profits will remain the same amount, but then the shares will be less, and it will be presenting a higher EPS to maybe keep the shareholders satisfied. So we have to do the weighted average. So say, for instance, we had 2 million shares at the beginning of the year, and at the end of the year, there is now only 1,8. So we'll have a 2 million plus 1,8 times half to get the average. That's what the formula sheet says. And this is also always included on your formula sheet. All right. Now, just to recap, I did give this to Mr. Fouchier to send on the groups for the district. All right. Let's get to. I just want to get back to team. Sorry for that.